All the talk at the moment, I'm sure you know, is about an equity bull market. So how do you get involved in this? Really, what you're looking to do is try and buy the dip. I'm going to show you a classic buy the dip candlestick trade today, and then use footprint to enhance this trade. If you don't have footprint, your timing's going to be off using candlesticks. The way you're using candlesticks is to try and define where you want to get into a trade. Think of it like a map. It shows you where you want to turn, where you want to do certain things. So we go and have a quick look at this chart. This is an hourly S&P chart. Now on that chart, the simple place that you want to buy, or the obvious place to buy, is 42.74. Now, the problem that you have is how do you define a stop on this? You can't, not easily. So what you then need to do is move down the time frame. This is how you use candlesticks in combination. You go 60-minute to 5-minute. From a 5-minute candlestick, now you get this. Down here, it's a classic Doji candle. What a Doji candle does is it tells you there's indecision. When this happens at a low, that suggests the next move is to the upside. So to execute this trade, you're waiting for the next candle to break the top of that Doji. When it does, you buy. But this really means that you're quite late on the trade, and this is the problem with candlesticks. You're always waiting for something else to happen, a close, something to say, okay, now you can do it. And this is where people lack, or where they're basically behind. This gives you a bigger stop as well. So what you need to be looking at is how that candlestick's made. What happened to create that Doji, which says now you can actually get into the trade. This is where you need footprint. Footprint gives you an understanding of what exactly is happening. So if we go and take a look at the footprint chart now, and this is crucial. This gives you that extra bit of information. Look at the footprint chart. What you've got here, and this is on the way down, as we break through 74, on the way down, you can see there's buying. You look at the highlight at the bottom, and you have delta rising. This means there are more people buying. As more people buy, that's showing a willingness to buy. But the sellers continue to push their offers down. The market starts to fall. So yes, people are buying, but they're not actually getting the market to go up. Now you know what you're looking for. The footprint's told you, you need to see these buyers actually push the market up. Then you can execute. So you're waiting for that, and then you can get into the trade. Watch what happens next. Delta continues to rise, and then the buyers start to execute at higher prices. They're now pushing. They're pushing the sellers back. This is what tells you buyers are willing to get in here now, and they're much more aggressive. This, before that Doji candle has formed, is telling you now's the time to get in. So this gives you a much better timed entry. You can be buying down at 71 now, not up at 73.5, 74, which is what the candlestick will be telling you to do. So what you've done is you've saved yourself 2 and a bit big ticks in the S&P, you've given yourself a smaller stop, and you're giving yourself the chance that once you're back above 74, this is gone. Your stop then is below 74, so basically you can't lose money on that trade anymore. If you haven't got a footprint, you're not going to be able to see this. And that's where footprint's so crucial. It allows you to understand what's happening within the trade, within those candlesticks, rather than wait for the candlestick to finish, which then tells you what to do.